make sure that we are going live. Good morning. And I think we are going live, everybody. Are we streaming yet? There we are. Okay, now I can settle in a little more, Victoria. I got the stream running. And you guys can hear me fine. Y'all hear me all right? Okay, good. Yeah, I do think it affects and everything affects the market. I think sometimes a bug that passes, it burps, it affects the market. But the European market does, I believe, have an effect. Let's put the MES up right over here. I have a penny stock I found, AERC. There goes forward 1193. Whoever's got those puts, those calls, could be a good day for you.
Do you think it would be worth buying a call now as soon as the market opens?
No.
No.
And I'll tell you why. Now, for me, I'm going to wait. I always wait because the market can be very volatile in the beginning. And so, if you're more of an experienced trader, like somebody like Jeremy or Sig, yeah, open it up in the morning. If I had got to my computer a little while and I'm seeing some of those same things, I might do the same. But I think right now it's better to learn and be safe. Now, if you did do one, again, I'm not here to give financial advice, try to teach price action. But if you did do one, I'd do a forward, not only do one, just to see what would happen, just so you could get out of it if it goes south on you. And I'd probably
I set up some rules for myself that I'm only allowed to trade when the market's showing a clear directional sideways movement.
ah
I have to have a specific channel, and I have to wait until the afternoon to capture the calm and not the volatility when legging into my strangle. Those are my rules at the moment. I've got them in a spreadsheet.
well, I like that. That's good. And you know what? Your rules will evolve as you as you go along. Let me see. Make sure I got this highlight extended hours. Yeah, your rules will evolve as they go along. Mine did, but that's a good rule. If you're wanting to capture strangles right now, that's a good rule. Now, 1197 on Ford. Now I know I'm S&P heavy over here. I've got SPY, which is the S&P, and MES, which is the S&P, and Ford, which is part of the S&P. Which I kind of like because if you know that there's momentum in the S&P, then you can trade several different ways. Options, futures, and stocks. So you can trade three different ways right there, following the S&P and following along with the trends. So let's go look at some levels where we could be with SPY today. Yeah, options are risky, but you can mitigate your risk with rules, and you don't have to lose the entire option. Now you'll hear a lot of options strategies, and they'll talk about well, you're only risking the cost of the contract, and yeah, but you don't have to risk. You don't have to lose the whole contract. You can get out when it's going south. If you lose just a couple of dollars, get your money back, go back and do it again.
Yeah, I got rules about exiting the trade as well. Leave it at least 8 minutes in the morning so I can see what the market's doing and making a directional trend before I exit. Although that rule is going to take some working on. I haven't quite worked it out yet.
Yeah, okay, that's good. And now Sig's videos are great. Sig's great in the morning. He's great. His videos are great in the morning because he has a lot of information on. He's almost like got a pulse on all of the market. I really enjoy his stuff. It's very complex for me, so I take little bits and pieces of it and kind of mix it with some other stuff that I've learned with price action. He's basically a pivot trader, and Sig's not one who's going to scalp an option. He's not. He'll tell you I'm no scalper. So, but man, I love the stuff that he has and that he teaches. It's just absolutely wonderful. Let me grab another larger time frame to do what I'm trying to do here. All
Does
right.
it take me a while to digest and understand everything the SIG puts out? If you really know what you're doing, it's great. But as a beginner, you've kind of got to take it bit by bit.
Yeah, Exactly. I what I did with Sig was I kind of immersed myself and just I'd listen to him in the morning. Now he uses Thinkorswim. I think he uses Tastyworks too. But he charts a lot on Thinkorswim, and truthfully, I learned more about Thinkorswim from him than anything else because I watched his videos, and I'd see how he'd get his indicators, and he's got stuff up here that I haven't even got to where you can just click on different styles and it pulls up different time frames and things like that. Uh, but yeah, his charting and then his indicators, some of his indicators are just outstanding. And but his knowledge is vast, and he'll put that trade on in the morning and let it run. But he has the confidence in that. That's another thing you have to get is your confidence in your analysis, and he just knows that that's what he needs to do. I don't need to edit that one.
While we're learning then, right? Okay,
Hmm.
just hear me out.
Sure.
So I know how to trade. Well, I don't know. I'm learning how to trade sideways market. Obviously, I'm going to have to learn how to trade directional rally and directional bear market as well. So is it worth just while we're learning and we're learning the price action and we're learning how to construct the lines on the chart and everything? Is it worth just listening to Sig, an idea of what's going to happen in the day, uh,
Yeah.
basing our trading strategy on Sig's analysis in the morning?
Well, yes and no. Yes, it is worth listening to Sig in the morning and getting his insight because
Yeah, yeah,
mm,
that's what
there's
I'm saying.
there's a
Just for
bunch. Yeah,
reference. But
yeah, he's got great experience, and he's going to say things that will look at this wick. He will say things that give us, a good idea. He's got some great languages, and he'll give us some good insight. The Econo events, I learned that from Sig. I've got he has the market watch. So yeah, absolutely worth it every bit. The more you can learn, and the more styles you can learn, and the language, the lingo that the market has its own language. Sometimes I bastardize it, and sometimes, by the way, I realize I watched a little of a stream last night. Sometimes I say this and there and this and that thing, and I don't give an actual name to the thing. So I'm going to try to do a little bit better. Some of that is just trying to force everything in when you're moderating, because I think faster than I can speak. So, yeah, it's good stuff, really good stuff. I like just kind of jumping in and digging my way out. So
because the general gist of what I got from Sig this morning is he's expecting it to be a bit of a rally today, but I'm still not confident enough to buy a call. Not because I don't trust Sig's analysis, just because I don't feel confident putting calls on. So
that's
that would be a naked directional trade, wouldn't it?
that. Yes, but that's excellent, Victoria, because I don't want to. One of the things I learned and I got hurt on earlier, but my own fault was making trades without really knowing what the heck I was doing, listening to what somebody else said the direction was going to go, but not knowing how to read the direction myself. So if it turned around and they weren't around to say, "Oh well, it turned around," I didn't lose. So I resolved myself I to learn how to do it myself, and so that
Victoria, you're gonna be so successful. You have a mindset of I'm going into my trading day and I'm not gonna trade. Instead of I'm just gonna find whatever trade I possibly can justify in my brain. You're setting yourself up for such success.
isn't
It's
she?
ridiculous.
Isn't she? That's good. That's good. Good encouragement there, Lance. Absolutely.
Yeah. But I am trying to put rules into place because Stone, what I was like last week. I was just looking up for any trades so I could get tasty books and understand how to put trades on. This week I'm trying to be a little bit more reserved, and I've got these rules I'm sticking by now just to sort of because I'm going to have to put trades on eventually off my own risk assessment, not relying on you and Jeremy. So I'm going
Exactly.
to start building these rules now. So yeah, thanks a lot.
Absolutely excellent. Excellent, Lance.
Let me give you all one more great piece of advice. I like to go ahead at this point and do inexpensive contracts without a stop loss. But literally, the market just opened and I had an emergency. I was sitting in front of my computer. I had an emergency call. I had to leave my home. I'm driving right now. And, like, if these were larger contracts and you know what I mean? At
Right.
9:30 and I didn't have upset.
Right.
I would be just freaking out. But right now, the only thing I'm sad about is I don't get to play that leg on the Ford, um, whatever's happening with Ford right now
Right.
for you. But
What's going on? But
Yeah.
this is where I made the mistake the other day. I've got to leave the market for the first 5 to 8 minutes in the day because there's so much volatility.
Right.
I can't make a decision on the direction.
Right. Nope, you can't, and it's difficult. And like Lance is saying, now I don't do stop losses on options, but it's with these options, I like to sit and babysit them and be ready to get in and out. I'm day trading an option, and I'm gonna follow. I like to hold my money's hand, or maybe I like it to hold my hand, but I like that's how I do these things.
I'm in a strangle. I put a strangle in yesterday, and I believe I'm positive on my call right now because I bought it at 20 cents.
Oh, that's awesome. That is awesome. All right, we got some movement here. This is our MES. Boy, that's a pretty big move. So now in about 28 minutes, we're going to have what's called jolts, and that's jobs report. So everything's going to, it does look like we've got some upward momentum. We're coming out of September, historically the worst month for stocks, and we are making a move. Now, I went out and looked for my Globex high,
I
and
like that analogy.
yeah, 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 yeah. I went out and got my Globex high and Globex low. Thank you. I appreciate that. And I appreciate you, Lance. Everybody, I love having new folks in here who got insight and add value to what we're doing. Big wicks right there, so we got some selling pressure. Could go sideways. I hope Paul's out there, man. He had those calls, and he was hoping they'd hit 12, so they hit 12. Boy, big jump in the MES. I'm watching a 10-second chart. I don't have those up for you to be able to see. That is on another computer. Hopefully one day I will be able to do that, where everybody can see my 10-second charts. That's a 15-minute candle, Keith. So let's go back over here. Hit the Globex high. So just like I want to see in a penny stock, man, if it's going to be trend day, I'm going to have to do something. Get my charts to cooperate with me so they don't go off the grid. If it is going to be a trend day, then we'll keep an eye on things. Then it's going to have to break this Globex high for one, which it's already pierced into it here. Come on, charts, cooperate with me. This is the one thing about TOS I don't like. All right, we are breaking the Globex high, so let's see if it goes back up, tested, or if it comes down. Let's watch that. Great book called Trend Following, and trend following is what I tend to do. I think the modern name is momentum trading now. Trend following is an older term from the 80s and 90s. So we're watching and we're waiting. I'm pouring coffee. That's why you don't see anything happen. I'm going to go look at that penny stock for those who are looking at penny stocks while we're waiting for the big guys to shake out a minute. I'm going to grab a couple of levels over there. And please feel free to interrupt and ask questions. If I think something's important, I'll talk over you. But now in the penny stock world, it's a whole different world over here. Penny stocks are pump and dump.
Ford right now, okay? It's jumped up from yesterday where it left us at around about 45 or wherever it was, and it's jumped right up to past 12 now. How many minutes would you give it going into the market before you see some stabilization and you see the volatility get shook out? About how many? I've got it to 5 to 8.
Yeah, I usually wait. Now Sig can tell in about 10 minutes by using 5-minute candles. I tend to wait about 15 to be able to get my range. I like to get a 15-minute opening range. Today is a little bit of an exception with the JOLTS report coming out at 10 o'clock in about 25 minutes. So I'm going to wait till after that happens. But in the meantime, I'm going to try to find some levels and some things that might be of interest as I'm looking to trade. Does that make any sense? Did I answer your question?
So today, if you had a strangle on, you wouldn't be closing any legs until after the JOLTS report.
Well, today I wouldn't have a strangle on. If I did, if I had gone in, I'd have closed it as this stuff starts to peak up, and I'd have found my levels to where I was looking for to hit it, and have closed it at within the first 15 minutes. And here's why: because if I hold it, my rule is sometimes I get distracted doing so many things. So if I don't close it within the first 15 minutes, I tend to, it tends to be a mistake for me. And then rather than, having a good winning trade or taking a good profit, I take less profit, or sometimes I might even lose a little bit on it.
Now, stop. Sorry, Victoria. Just a quick question. Now I'm trying to get rid of my call right now. Would that be that I'm selling it because I bought it, or am I buying it back?
No, no. If you're trying to get rid of your call, you bought a call, now you want to sell it. Just like if you buy a stock, you want to sell it. So same thing. You want to sell it to get rid of it.
All right, thank you.
You're welcome.
Sorry, Stone.
No, don't be sorry.
So within the first 15 minutes, have you decided on one leg to close, or have you decided to close out the strangle completely?
It's subjective. It's
Okay, I'll leave it at
yeah, it's subjective because each day is different. And now there may be a day where I go, okay, we've got a pop in the open, but I'm expecting it to be, or let's say we had a dip in the open and we were expecting a trend day. Or we had that morning report and we're looking at everything to be a little bullish, a rally. So if I get that dip in the morning, which I didn't just now, but let's say I did, well then I'm going to close my put for a gain, right? And then if I'm expecting that rally to happen, then I'll hold on to my call and let it run. And so, but it all comes down to knowing that price action and knowing how to follow, knowing how to follow it, knowing how to read it, and learning it. And in time, and it takes time. In time, you'll be able to do that. Like yesterday, I get a kick out of it, being able to say things about where price is going and drawing lines out, and it hit them. I get a kick out of that because when I joined,
I bet you do.
yeah,
It's
it's
it's catching fish.
well, it's fun, but it's also it's what I learned. And when I first got into Bullish Bears and I joined the Discord, I told the guy, you know what pool is, right? The game of pool, billiards. Yeah. So we call it pool over here. So I told the guys, I said, man, you call price like a pool shark. Calls shots, 8-ball in the corner pocket. They're calling price, and I was amazed. They taught me how to do it, so I'm not amazed anymore. It's actually everything's right there, and you can learn how to do this. And once you learn how to do it, look at these guys go. Once you learn how to do it, then you can start seeing it for yourself. And you start asking questions and you start pointing things out to us, and we all learn together, and it gets better and better. But it takes time. You heard me say yesterday, I thought I could learn this in 3 months. Okay. I'm still, kind of crazy. Wow, 37.70. So we are looking at some bullish movements right now. We're going to see what happens when this report comes out in 20 minutes. Now, an experienced options trader, okay, Ford's giving us a little dump right there. Now, let's just hang on and see what Ford's going to do. I don't think it's going to flush out on us, but right now it's got a little pullback. Well, let's look at this. This line is the 8. Now, Jeremy talks about the 8 all the time. I used to use what was called the 9. We call riding at the 9. Well, it's great to have the 9, but the 8 is divine, because what we look at this moving average, when Jeremy talks about bodies above the 8 or body close on the 8, when price is above its moving average, this one, it's bullish. But it has to come back. It always comes back and touches it. This is a pullback. It's what we call a pullback. So we've got a pop. We've got these candles, got a red handle, a red hammer. We got, with a wick down here, which the wick below indicates buying pressure. A wick above indicates selling pressure. So we got bearish pressure, bullish pressure, right? If you can see that, if that's big enough. Let me do that just a little bigger. All right. So when price goes up, this is basically a flag, a bull flag. So bull flags are good to study, and you usually get 1, 2, maybe 3. You get 1, we call it 1, 3, 5, and 7, right? But you might get a 2-legged bull flag and then it fails. But generally what we're looking for is that price when it's bullish to flag, come back to its mean. What I'm looking for, this would have been an entry point. So price being above the 8, flagging up, coming back down and touching that 8, this candle would have been the candle I would have gotten in. And then I'd have gotten in at that candle, let's say at 373.48. If I'm expecting a move, higher than that, and we are, then I could have, done a bunch of other different analytics. I'm just going to try to do this for short order here, and had price targets up. Then I would have known when I got in here, I'm looking to get out, let's say at 375. Okay, so I would get in here and I would ride it and then get out at 375. So my price target, well, let me back up. I'm confusing myself on that because I'm watching the price at the same time. So a bull flag is what we're looking for. We look for a flag, and now this is a second one, and it's pulled back and it's coming back close to the 8 again. So this would have been another, if it came all the way down to the 8, man, that'd have been a great entry. So we're looking for price to flag up again. So we've got 1, 2, we're looking for a third push. We may even get more. Generally what happens when we get these things, we have these, ascending channels like this, and that's kind of light. Let me just do it a little differently. We have ascending channels like that, and what we look for is this pop on these channels. 1, 2, when we look for that third pop, and when we hit that third pop, well, that's telling me we might be ready for a big pullback like we got yesterday. And when we get those big pullbacks, then that's an opportunity to get back in at a better entry. And with options, say again.
Get back into a strangle at a better entry.
No, not a strangle. Into a directional option move. I'm talking totally directionally. That way you only have one direction you're dealing with, and you don't have to worry about cutting the put at the same time. Strangles are great when price is going sideways. But when you have momentum, be it bullish or bearish, then that's when that's when you want to go directionally. And directionally can be really good, and especially when price sells off. Man, when price sells off, you make more profit selling, on the sell-off than you do on the bull run, because it takes the steps up. It takes a long time to go up. It's kind of like when losing weight. You lose weight, and it's real hard to lose weight, but it's real easy to gain it. So
are you basically that's you teaching us how to directionally trade?
yes and no.
But I was going to say with the concession that this report coming out today, so we should probably hold off.
Well, if you're a younger trader, yes, I think you should hold off. More experienced traders have already gotten in this. Sig probably already had his options already laid out, and he's letting it run because he's got his Mr. Wizard gear. He's got all his gizmos and gadgets and pointing in the direction, which I think is great. I love it.
So we could establish here already that we're expecting a directional day then, yeah?
We're expecting a what day? I'm sorry.
A directional day, a trend day.
Yeah, we could, but not. I have to wait because normally trend days. Now here's the thing with like the S&P and SPY, the ES, you get 20% of the time you get a trend day. So that means one day a week you usually get a trend day. Yesterday was the first trend day I think we've had in a while. Look at this popping up. Yeah, we could have a nice. We were already up $8 for the day, which 2.34%. That's a big direction. Let me go over here and check out another chart that I have. So we're already at what's called the market maker high, which is about 375.38. So we could see a pullback at those levels. But what we're teaching, what I teach basically, is price action, and that is the movement of price, how to follow it, and how to chart it out. And when you learn that price action, there's 12 cells 17. I hope you guys that have those calls are doing well with them. When by learning price action, the movement of price, it doesn't matter which direction it trades in. You can trade it all. The sideways trading that you've been learned, the strangles, which have been, when the market goes sideways, because we've had a lot of sideways motion, especially in September, a lot of indecision. Those strangles are great, and we're going to get sideways motion at some point in the day, just like we did yesterday. And any trend day that I've seen, not anyone, all of them, but let me just say it this way: a majority of the trend days that I have observed and studied usually have a time in the day when they go sideways. And it'll go sideways, and that gives you an opportunity to get in a strangle, because we're not sure that it will resume the trend or if something's going to happen to cause it to reverse. And so we're looking for things like that. And that's when you hear Jeremy say things like 50% retracements. We look for reversals, and we look for things like those movements to find out if we're going to get back in or not. Let's say we go here this way, and let's say price goes sideways for 10 or 15 minutes. Well, as price goes sideways, we could get into a strangle, and then if that's what we chose, and then if it breaks to the downside, well, we cut our call and write our put. But what if our put just goes down to 370, 356? This would be, or right down to, let's say 370, 356, and then price bounces and goes back up. Well, what happened was we had a push, we had a little sideways motion, then we had a pullback to the 50% retracement of that initial bull run. I call it a bull run, the initial trend, that 50% retracement, and then it bounces and goes. So that's why we look for those 50% retracements, and we try to mark those areas out after we see a trend taking place, because those are great areas to get in. If you want to take a call, if you know it's a retracement and it's going to bounce back up. And you'll hear Jeremy, he gauges this stuff pretty doggone well. About he has a great, look at it go, long time. Wow. Let me just say wow for a minute. Wow. This is so refreshing after a whole month of blah. So, learning price action is key for everything. Having some way to gauge the movement of price so that you can base your trades off of those moves and probabilities. Is that making sense?
Yes.
And risk management is key. Risk management is key to everything. You have to have risk capital, money that you're willing to lose if you're going to lose it all. That's not going to be your insurance money. It's not going to be your life savings and things like that, so that you can comfortably learn how to trade. And we've got some great teachings, and I'm kind of I'm a quality over quantity guy. So we're all working on some stuff to get out, and I hope to have some new video lessons this week, because I'm changing the way I do things.
You had said that risk management was everything. I just want to add something to that. Risk management is everything.
Thank you. It is, isn't it, Lance? It is everything. Yeah, if you don't have good risk management, now I tell you, risk management in options is a lot more challenging for me than it was over here in penny stocks. Because in penny stocks, if I wanted to take a trade in the penny stock, man, that's $4.17, $4.18. This is why I like penny stocks. Now it's ugly in the formations of its candle, but if I'm learning, my price action, I've got a flag here, it goes back up, flag this a bit pullback, we can expect this thing to possibly push back up to let's see where its pre-market high was, way back over here. So we want to see price here break this level right there if it's going to remain bullish. But it's also a possibility that it could go up that way. I'm just going to hit some peaks even though I can't see them well. And I'll finish my explanation so you'll understand what I'm saying. So what with penny stocks, I can go in and I can trade one share and risk a whole lot less than it costs me to trade a contract. And I can really mitigate my risk here, because in a penny stock I can put in a solid stop loss. And what I mean by that is if let's say I wanted to get in here, if I'm seeing this move up, I've got some targets, this is looking bullish, it's looking like it's gonna go up to those areas, then I'm gonna get my entry in somewhere around $4.13, $4.14. I'm gonna set my stop down here, and at this point, because I have this pivot at 404, I would set my stop at 402. I'd set it 2 cents below that pivot, so that if it came down and it hits my stop, I'm out and I lose $4.18 or $4 and whatever cents. I don't lose a lot. But if it doesn't hit my stop and it continues to go, I'll already have in a penny stock, I'll have my price target. Let's say I have my price target at 471, and I will put in my stop, and then I'll bracket my sell order for 470 in, and then I'll have a stop loss in, and I'll have my target ready to sell. Because in penny stocks, see these wicks, a lot of times it'll just wick to that target and then just go out. So if you're not quick and you're hot keys and you've got that personality, you drink 3 or 4 Red Bulls or whatever, and you're not there, or you got to go to the bathroom or whatever, you'll still take profit because it hits it. But the good thing is, I'm learning price action somewhere that I can really take little risk, and I can trade one share at a time until I get comfortable to up that. And that's how I learned price action in penny stocks, trading one share at a time, and then building it up from 1 to 3 shares, from 3 to 5 shares, from 5 to 10, and then I jumped to 100. And then I was trading back when my account, I say this before the hurricane and all that, because Ida kind of messed us up here in New Orleans where I live. So I had to drain my account to survive between Ida and the pandemic. But I used to trade 3,000-4,000 shares of these I was doing really good. I was making good profit.
Don't trade those?
Yeah, no, because I don't have that account. I'm building my account back up. I had a large account, and I thank God for that large account, because that large account I had to live off of because of the pandemic. I learned about stocks in the pandemic, but then here in New Orleans, we got hit really hard being a tourist city, and we're so, we've got our French Quarter and everything, and, 450, I think we have 450,000 people in the city of New Orleans, and 100,000 of them are employed in the tourism industry. It really screwed us bad. So then as the work was slow to get back in summertime, I didn't have all the work that I used to have. So I was thankful that I had, done some stock trading, and I was able to live off of that. And then when the hurricane came, the damn thing, it wiped me out. So, but no, it's all good, because I'm building my account. So, but now I can build it faster in options now. But here in the penny stocks, see, we're getting 5 minutes before. Okay, let me shut up. We are 5 minutes 4 minutes before this report, this JOLTS report comes out, we've gone sideways. Now, if you're looking at entering into a strangle, now's the time to do it. Because
Before this report.
yes, so, and I don't rush it. I realize that I've been talking about a lot of stuff, but
Should I leg in or just buy a straight strangle?
now I don't know, because I don't know how to buy a straight strangle. But I would, this would have been a time to do it. I don't want anybody to lose money, so at this point, I wouldn't do anything. I'd just watch and learn, and not risk anything. But this is where you could have done it had your moderator not been talking about a million other things. So we're going to have the JOLTS report come out in about 3 minutes, and it's going to jolt the market.
The strangle is still available at the same price as it was 5 minutes ago, so why not?
Well, okay, if you're comfortable doing that, then do it, and then get ready, because
What strikes are you looking at?
12.5.
oh, you get 12.5.
I'm doing it for the 7th of October because I'm going to day trade it, so I'm planning on being out of this by the end of the day.
Ah, okay. Let's go to 12.5, and that's the 7th, 3 days from now. So
The 12 puts are very expensive, but the
yeah.
12.5 calls are cheap.
Yes, they are.
12 and 19.
Yeah, that's what I have too.
I have 40.
Oh, you have 40. Oh, you must be looking at the
The spread?
no, let's see.
14th?
40?
The 14th, yeah.
Oh, you're looking at the 14th. Okay, she's looking at the 7th. Different day.
Yeah, I might go for it. Just the price is cheaper than it was 5 minutes ago, so why not?
So here you got your sideways motion right now. We're looking at a 1 minute chart on Ford. I'm going to hit some of these levels, because if it's going to go back up, it'll hit these levels here, like a price ladder. If it's going to go back down, we can look at these levels. So now I've got a price ladder. So you got some targets. So those are some areas it could pop up in. Now Ford doesn't move fast, but we're already up 71 points. 71 cents, looking at the MES. So we have, where's my Ford options change? We still have a 62.72% chance on the October 7th options ladder for a plus or minus move of 0.574, so 57 cents up one way or the other. Not saying that it will do that, because Ford does move slow, so you're probably going to get less than 50 cents today move. But
Looking at your delta for that.
say again?
That's delta, isn't it?
No, I'm looking at my TOS has a options chain that gives me that information. That's the one thing I love about that options chain, and I learned how to read that watching Sig's morning report. I really like Sig's morning report. As a matter of fact, I have a strategy that I'm working on writing out for everybody. I call it the jigsaw, and the ig is Sig. he's part of that strategy. So, yeah. So we're going sideways right now, and I got a little pop here, and in about 4 seconds we're going to find out what's going to happen. We'll see some volatility in the market as this report comes out. So let me see. I'm missing some people here today. So let me see what the news is going to say. I go to Financial Juice.
If they haven't filled, can you still sell them?
Can you still sell them if you have them?
If they haven't filled.
I guess. Can you sell them? Well, usually. Well, hang on now. We're moving up. Must be a good report. Let's see. JOLTS. They're doing it right now. Okay.
I don't see it going above 1250.
If it trends, you could, Ford moves slow. It could. Let's see, MES here. So now I'm going to sit back and I'm just going to watch and see what happens here, because these reports sometimes affect everything. If not, well, it'd be wild to have another trend day. That would be just absolutely. Or what might happen is you don't get an actual trend day, but we get some movement in the upward direction, and then maybe go sideways for a time, and then have a pullback. So it's not, but it could trend all day. Stock's going to do what they want to do. Now this is a little rounding thing here. Let me go check on my UVXY. A little rounding, almost like it's trying to form a cup and handle, but you got to wait to see if it forms. We are hitting a high on SPY, rhyme and pun intended.
So my pot hasn't filled yet. Should I just cancel it before it fills, because it seems to be trending upwards?
Yeah, I would cut it if it hasn't filled, or give it a second and see what happens.
Are you using market or limit?
I don't know. Hold on.
That's a good question, Ricardo.
Well, that's how I figure things out. When it on my interactive brokerage, it tells me it doesn't fill because it's a limit order. So I have to go to market anyway.
Oh, that sucks. We're gonna get you. Are you I don't know. We have to figure out how to fix that, or get around that for y'all.
Hey, when you do a limit order, you can give yourself some variance of 3 cents, 5 cents from that limit to allow it to fill with a parameter of your choosing. So look into it, limit offsets when you go ahead. I don't know interactive brokers.
Right, I don't either.
Limit offset, every broker will have it.
Yeah, I don't know interactive brokers either. I'm sorry.
Okay, thanks.
So we got a little pause right there. And while we wait for that little pause, you see that right there. As I go and look, I want to show you something real quick. You see that line I just drew right over here at $4.43? I went over here. This red line is my volume weighted average. And so where I see it goes straight like that for a while, or it bends, I hit it because I'm like, something about that. And I wasn't looking here, but as I put it there, then I looked left, and that's why I marked those lines out, because look, it's right there. This 443, it stopped, wicked into it, but it hasn't gone beyond it yet, because price likes those areas. That's sometimes a rest spot. So we want to see it go above this, maybe come down and retest. Now, penny stocks are different than the indexes and SPY and everybody. They kind of move on their own. They don't, which makes them a great thing to trade sometimes, because if the market's doing crazy stuff, there's always something to trade, and you can find it. And penny stocks can be a good little thing to do that, and they can be lucrative. You just have to be a little faster on them, and sometimes you have to have more patience. So we had this movement going on over here. We had these channels come up. We had a little sideways motion where it was almost like a pullback, and now we popped up, and it looks like we're getting another pullback here. If I go to Chart Nasty, you're going to see all kind of levels I have on this thing. I'm gonna name it Chart Nasty. So here are some of my historical SPY levels. So we have room, and on my historical SPY levels, you can see price has hit them. I have a space here. Why, I don't know. But you can see that these levels have been hit, even hammered onto. And some of these levels are from so long ago that I had a different way of charting. All right, let's get those price levels on the right side so we can see them. Is any of this making sense? Am I talking too fast?
No.
No, it's making sense.
Okay, I want to make sure.
Just zoned out at the moment, trying to get this order filled.
Sure. On the right. Boom. Oh, I'm going to have to do this for all these old levels. I'll do that in another moment. So we're still not really in a decisive direction 100% yet as these JOLTS reports come out. Let me look on what we need to know. Have we hit JOLTS? Yeah, it's 10:05. Factory orders, Jolts. Factory orders are being mentioned. And I don't see any really red. The factory orders weren't that great. Yeah, I'm learning the news on these things because I learned price action and penny stocks. I'm still, and because of that, when you trade penny stocks, you can only go bullish. So I see the bull flags better than I'm starting to see the bear flags now. Ford just busted 1226, so we got a little motion there. I got a price at 1233. Let's see if we got some more price levels there. I don't right now historically. So there's a little push there. Now, if Ford's pushing, it's possible we'll see these guys push too a little bit. Sometimes Ford goes a little bit ahead of the SPY. So let's just kind of wait and see. Got a lot of candles.
I'm going to cancel that put on Ford then before it charges me commission and fills. Okay?
There you go. Good. I forgot you have all those commissions. I'm using Webull, so it's a little easier. But as you know, sometimes it's a little harder for me to get out. And Ricardo, what I've had to do to get out is use the market order and do what I call, or what's called, sell into strength, so that I get a good return. Listen, I'll be right back. I got to let a dog in the door.
Ricardo, I tend to go with the market just to make life easy sometimes. But the one thing you need to, if you do use Webull, I don't know, sometimes if you're dealing with heavy volatility like the SPY, it will not allow you to do a market order at this say.
All right. Oh, I hate that.
Allow you to do it. So yeah, really check out that limit offset or in the settings of your broker.
Will do. Thank you.
Lance already adding value. So yeah, here we have it looks like a pullback. So we have to give it a little minute to shake out. These often I see these Econo events. They can change the direction of price. They can make it slow down for a little bit. And I see them as kind of like the opening of the market. Some Econo events are more volatile than others. So you'll see that I've seen huge spikes when some of these auctions have come out in the afternoon. It's been like I got caught in one, and that's why I'm cautious about certain things. Let's go back to our little penny stock fellow over here on this VWAP, overnight VWAP we'll call it. This is where the volume weighted average price was for most of the night if we or most of the pre-market if we look at it over there where I marked it out. And it's taken a pause there. It's not really pushing through. It needs to push through that if it's going to continue to be bullish. Now, Ford slamming into that 1226 price line that we had from a couple of days ago. Notice it was easy to find those prices. We just went left, looked left, and marked out those. Ford's walked up all those prices since we did that when it was down here.
It looks like it wants to hit 1230.
Yeah, I got 1233 there, so I'm hoping it does. It needs to respect my lines. Oh, you ever watch that Fluffy video about Arnold Schwarzenegger? It is hilarious. Oh, nice to meet you. You're so strong. Anyway, I got a little more persona than I did yesterday. I was so exhausted yesterday. I like this red hammer. Red hammers are pretty, especially when they slam in the 8 and go through another line, and at the same time, these are VWAPs. This red lines here, those are previous VWAPs. So bam, I like that. That lots of buying pressure right there. So we may be continuing to head north. Now Ford, don't let that candle fake us out too much yet, but it's giving us a little fake off. And these things can tend to try to shake out traders and test your intestinal fortitude and your nerves. So we kind of hang in there. We've got this almost the same identical thing on the MAS over here as we do with SPY, which you see why I like to trade the two together. Because, man, if I know I got bullish sentiment here or bearish sentiment here, I'm going to have the same thing here. So I can, mini contract, $5 a contract, boom. But it's a lot more than that, believe me. Because this stuff will rip your face off and blow your account up fast if you don't know what you're doing. Don't recommend trading futures until you learn price action better. Have more experience, because you can get your face ripped off.
So I've been scalping MES all last week and just following your price action that you guys do, and I was doing very well. And then yesterday, I don't know if you remember, I think it might have been 10 o'clock, it ripped up.
Mm-hmm.
I don't even know, it was crazy. I don't even know what happened. And I got caught in it. And I lost like over $150 in it. And
Wow.
that I made back.
Now, was that paper money or was that real money?
No, it's paper. It's all
Okay.
paper.
All right, that's the Trade of 8? Was that Trade of 8?
For sure.
Yes. Was that Trade of 8?
No, I use TradingView.
Oh, TradingView. That's right.
I can scalp on TradingView.
That's right. TradingView. That's right. Yeah. And so, exactly. And you didn't have a stop loss in?
I don't use stop losses when I'm scalping.
Yeah. Yeah, it can rip your face off quickly. Those pullbacks and those surprises. Yeah, that's
I tried to get out and it was too late, and I'm like, I was not happy.
no. Of course you weren't. No. Well, look, it better to be paper money than real money. I know a lot of folks have lost real money that way.
Definitely.
And you can blow your account up if you got a small account. Man, it'll rip your face off when it hits it's volatile.
Slowly, I think I got like half of it back already now, but it's just a learning lesson.
Yeah, it's a learning lesson. That's exactly right. Well, you're getting it, and the price action does work. I look here. We got a big red candle on the 10-second chart on MES. I got 38. I got 3,800. Man, that thing's going up today. 103 points already since yesterday. Let me see if I got any JOLTS reports. Let's see. We do have JOLTS. So we're through JOLTS. So that should.
It's a jolt report.
That's a jobs opening. Let's see, jobs opening rate.
Oh, I already got that report on my Market Watch. I didn't know that's what you were talking about.
Yeah, I see it now. It's already done. So I was waiting to see how the market reacted to it, and it looks like currently. Now this is where I look at larger time frames. Let me turn some of these noises off. Let me open this up here. And let me go to a bigger time frame. Now, we have the daily, of course, but I'm going to go to a 2-hour right now. And you see our 2-hour chart. Look at this. This was yesterday. Flag, that's a pullback, and we got another flag and a pullback. So this is technically our third movement of a flag. If on a 2-hour chart, that's a 2-hour candle, if it continues. Now, what could happen, maybe it'll continue, maybe at some point it'll go sideways, maybe it'll reverse. We have to I follow it to see what it's going to do, and I'll look at different levels. That is a big red hammer there with a lot of buying pressure. That's what that wick is. That's the bulls coming in and pushing price back up. So that's my 2-hour chart. Looks bullish on that. I'm going to go check my half-hour chart, 30-minute chart. Looks bullish on a 30-minute chart too. Boom, 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 boom. Now, how this is going to unfold in the next 15 minutes, I'm not 100% sure right now, as we are technically going a little bit sideways at the moment. I'm going to go check my 15-minute chart. My 15-minute chart looks like we're bullish as well. Now this candle is going to close, and this candle just opened. So we're going to see how it does. I'll check a 5-minute chart. I'm showing you all these charts just to give you a little bit better idea of time frames. And my 5-minute chart looks mighty bullish. So, but we've got, the last 10 minutes have been a little bit sideways. So we have to just kind of keep an eye on that right now, because we do look like we're going sideways. And then what I like is, I really need to redo this guy. I like my 15-minute opening range. I measured the entire candle wick to wick, or if it's just the body, and that gives me my 15-minute opening range. And the reason I like that is anytime we're above that 15-minute opening range, we tend to be bullish, and anytime we're below it, we tend to be bearish. In the middle, we kind of tend to go sideways. But with the top of this range, what sometimes will happen is that's a bounce spot, or that's a critical support. So if it doesn't bounce off of it and falls back down, we're going to have big pullback there.
Do you always use the 15-minute chart?
Yeah, I always use the 15-minute chart to mark out my 15-minute opening range. You don't always see it over here because this is one monitor I have. Look, this guy broke 443. So this is one monitor I'm using right here, one of my big monitors. So and I have two other monitors that I'm using, but I can't put them all up. And one has my account information, and I don't like having my account number or even any of my stuff showing, and I haven't figured out how to get rid of it. Okay, this is a good example of what I talked about in the penny stock with the setting your stop loss. Remember I talked about setting your stop loss and then having your target ready, because sometimes it just wicks right up to it, and there it is. There's your example of that. That's why I use those limit orders when I do a penny stock, and I have my once I enter in, I put my stop loss in, and then I put my target in. And then I'm not concerned. Then I can let it run. I can walk away, and I'm not concerned about it. I can go have lunch, and I'm not concerned about it because I've already managed my risk. I already know that I'm going to lose. If I'm out, I'm going to lose this, here, and I might not lose the whole $4. Actually, I might only lose 10, 15 cents. But then I've got my target in, so that if I'm away, I take my profit. But that works best on penny stocks. You can't necessarily trade everything like that. Now I can trade the futures like that. I can take an order and put in a stop loss and then a sell order. But it's a little different than trading a normal stock, because it won't once my for example, if I had set a stop loss and a sell order in a penny stock, then once one of those were hit and I had linked them together, once that's hit, then it's done. In the MES, bracket orders are a little different. So if I manually set a stop and I manually set my sell order up top, if one gets hit and the other one doesn't, the other one stays there, and if you're not careful, it goes back and hits it, and you get into a different direction than you want to go. All right, so here we are, going sideways right now. So, would I take a strangle right now? This is a time when you could, and I'm not 100% sure why we're going sideways. We have another event at 11, 4-week bill auction. I don't know what that'll do, and then we have a 52-week bill auction at 11:30. I'm not sure those will have a lot of volatility in the market. They don't seem to be. They have little yellow dots next to them, but they don't show the volatility that everything else shows us. And I think we have some Fed speakers. Oh, we have Fed speakers. All right, now is that regular? Why doesn't Thinkorswim's ticking me off. Why doesn't it have those Fed speakers there? What does your market watch say, Ricardo?
Are you talking about that report?
No, I'm talking about the Fed speakers that are coming out. Do you have a time for those guys?
No, but let me check.
I've got, and I have to sometimes transpose. That says 9. So this is 10:45. That's probably 11:45, and that's probably 1 o'clock. So it looks like at 11:45 and 1 o'clock we have some Fed speakers. So what does that mean? It means we might go sideways for a while. It means we might have a pullback coming. You still there, Victoria?
I am. I'm trying to leg into it, strangle.
Did I call you Virginia again today? I'm trying to make it right. I don't know.
11:45 Jefferson speech.
Right. So those Fed speakers, as Sig says, and then when they come out chipping their teeth. So when I watch those guys, they start chipping their teeth. Anything could happen. The guy says, I think they're looking for dovish remarks, and rather than hawkish. But you see, we got a little sell-off going on there right now. So this is going to be a pullback. There we go. Get some more levels up there where I can see it.
I might have missed the conversation or the point, but it seems like you were saying that you can go ahead and do like bracket orders, stop loss, take profit on penny stocks, and you can do them on futures, but they're a little different. Were you inferring that you can't do them on options? Because you can, but I must have missed.
Well, you can. However, from my understanding and my experience and what we've learned here is that they can be, you can get stopped out quicker on a contract than if you just would do it like you were trading the penny stock in pre-market. And I think it depends upon your broker. What broker are you with?
Yeah, I'm with Webull. As I was saying yesterday ad nauseum, that I wish you were able to actually put the bracket on the true stock.
Right.
Which you can't, but you can go to the penny with stop loss and take profit on percentages. So if I wanted to do a stop loss of 20%, I mean, however volatile the contract.
So you do it that way.
At that exact point, and it'll take profit at that exact point. It's not a perfect science, but you can at least give yourself those parameters.
Right.
Not as tight
Has
as
it-
a penny stock, or not as accurate
As a penny stock.
You can't go by
Stock price, right. You got to
right.
strike price.
Percentages.
Or, I mean, yeah.
Or you can actually say, I only want to lose $5 on this, and I only want to gain $20 on this, and you can put that into on the price ladder.
Huh.
But yeah, it's it's not a perfect science because it's not the the technical levels, which is what I'm waiting for.
Right. Yeah, I know they don't give us the technical levels. Yeah, I know that, and I learned from Sig a lot that a lot of times you'll get stopped out on those quicker than if you just you have a pullback and you can just wait for it to come back if you know where like the sentiment and have an idea where price is going to go.
The nature of the volatility of options.
Yeah.
They're not following price because they're a derivative.
It's crazy.
Amazingly
Yeah,
smoothly.
exactly.
The ability to at least do it in
So you can do. I like that elementary way. That was pretty good. Well spoken. I'll have to check that out a little more. I do it on Webull too, but I have not used the stop loss. I look at options much like pre-market in the penny stock. You can't set a stop loss in a pre-market on a stock because once you do, it sells. No matter.
And because of the nature, the wiki nature of options and the nature of all the Greeks going into it and the mathematics,
Right.
I choose not to do stop loss. I choose to do, just like you do with options, I choose to do manageable contract prices that have no issue losing the entire contract because nothing is worse than when you are so close and something that has nothing to do with price action, has something to do with the Greeks, stops you out. Worse. So I
All right. Right. It is. And the Greek thing that was mind-boggling. And what I've learned for directional options, the best thing, when I started trading options because of the Greeks and because I was learning how, you have a strike price and it's like different than the actual stock price and all that stuff that comes with the, the balancing of the two buckets of water as you're walking across that tightrope and you got one in each hand and they keep changing the weight of the bucket on you. It's crazy. But what I've learned for me, and I'm starting to to perfect, if you will, or hone the skill of is just looking at my strike price, getting all my my deltas and everything in my head before I make an entry, and then saying, okay, I'm going to have a strike price. Let me give a better example of that right now. So we got 1 day out. So let's say I'm looking at SPY and I'm expecting it to be bullish. Where is my? Come on, options ladder.
Good luck in the market, and I'll see you guys later on this afternoon.
Thank you so much, Ricardo. Have a great day, and we'll catch up with you. So let's say, Lance, I'm looking at SPY, and I'm expecting it to go up. So I want to look at a strike price, and I'm going to go 1, 2, 3, 4, 5. I'm going to go about 6 strikes out the money on a bullish side on a call at 382, and so I'm gonna have that in my mind that's what I want to get. That's the call I'm going to buy. I'm going to highlight it, and then before I buy it, as I'm ready to buy it, I'm going to watch price, and then I'm going to look for an entry where I can get in. And let's say I bought it, and I was looking at this movement here, so I would wait for the pullback, and then I would buy my call when it hit my line, my 8 here, and that would be my entry. So now I'm not thinking about theta, I'm not thinking about delta, I'm not thinking about gamma. I've already thought about that, and I've already found my strike that I want, and my however many days out that I am, and that's my entry. And then I strictly trade it on price action. Then I don't even watch it, and then I look at my candles. I know my targets, and I'm going to get in here, and I want to say I'm looking for a $1.50 return, or let's say I'm looking for a $2 return. So I get in here, and then when price hits that $2 mark, I exit. Now, if I'm looking at all my Greeks, if I'm looking at the option ladder, if I'm trying to figure out all that other stuff that's going on, I'm going to screw up, and that's when I've screwed up before, and I get in at the wrong point. But when I go back to my basic principles of penny stock trading, which is, price action, and I go to my basic principles of price action, following the trend, getting in, and buying low and selling high, then I do much, much better trading optionally directional that way. You're 100% right.
I use options as only because I don't want to buy 100 shares.
Yeah. Oh no.
All I do is look at the chart and I buy.
And perfect. You just trade the chart. Just trade the chart. That's right. And with enough, now I'm not going to do that on a 0 day at 11:30. I'm not going to do that on a 0 day at 11:30. I'm going to go further out, right? So, but that was my struggle. So I'm just kind of letting that out. When I started trading options, it was like there was so much going on that I forgot my price action. And I was looking at everything else and trying to figure out how to get in and how to get out. But when I go back to basic price action and I just trade the chart, and Jeremy and I've had these conversations in private a lot, but he also talks about it when he's moderating, is we just want to trade the chart. So that's what we do. Hey, let me do this real quick. Hey, everybody, thank you for watching us on YouTube. I should have encouraged you earlier to click like, subscribe, and share. We're here at Bullish Bears. We enjoy being with you on YouTube in the mornings. We're going to head out now to our Discord in Bullish Bears, where we're going to discuss things a little differently and talk a little bit more further in depth. Hope you got something out of it, and I hope you have a good day. Come find us. Check you out later.